So this is important, and what do? They end up, we have covered all these in terms, this is what's done, I'm a refresher, so all the different ratios that we have. So activities, we have the receivables, then we have liquidity, current assets, we have the leverage, and after the leverage we come up to, so these are the different ratios again. Profitability, return on equity, very often used. Return on capital employment or return on invested capital is also very much used. Earnings divided by the capital employed, which is basically debt plus equity. Net profit margins, gross profit margins. On activities, you have asset turnover, the most important one, inventory period, receivable period, payable period. This is your working capital, and this is what you have to manage. And if you have nightmares, you namely have nightmares coming from those if you not manage them properly. Today, if you're a startup, your payable period is non-existent because they want money cash. If you have no inventory, it's okay, but you have a lot of receivable in there. So this is quite important, even more important than your profitability. On your liquidity ratio, current ratios, straightforward, current assets minus current liabilities. And on the gearing is how much leverage, i.e. how much debt you carry versus the equity that you have. It gives me a certain idea about comfort or non-comfort in terms of your liquidity, strength of your balance sheet. Now, when we do this, why do we do it? I'm going to use the example of B-Synchro. B-Synchro is here, you have the management team here, they've been there. So what we have done, we went down and we discussed and decided. Michel is not here. He's the owner and he's the chairman. He's Hala's wife. Hala is the CFO and she's also the head of HR and administration. We sat for the team a couple of sessions, three sessions with Michel, and we said, okay, we're going to put together the scorecard of the CEO, of the founder. And this process, I will start with Rida. I'm meeting with Rida on Friday. He will put it together. I have started with Ziad and he's going to work on it. And most of the companies that we are working as coaching, we tend to do this. So what is the point of it? The point is that we are trying to, I'm sorry. We have, okay. There is one slide missing. I don't know where it is, but it's okay. We'll manage. So what you have here is it's trying to look at your strategy, the strategy. You could have a good strategy or you could have a bad strategy. And you could like the way you execute. Ideally what you want is you want to have good execution for a good strategy. But in a number of cases, your strategy might not be good. It might be medium or it might be poor strategy. Or your execution might not be excellent. You might have average or you might have low execution capacity. The way the Balanced Scorecard does, it tracks how well you combine the execution and the quality of your strategy into one sheet of paper. So what it does, it looks at, on one side you have internal, on the other side you have the time. So internal versus external, you have today versus tomorrow. So this is the way, and you have to manage both dimensions. The internal and today is basically what makes you unique. What are your competencies today as an organization? What makes Rima special in what she does? Why is she better than others that are competing in exactly the same field? And she needs to answer this question, and this is about Rima today in her business and internally. Then we need to look at how is she focusing, not only internally, but how is she focusing in the future? How is she going to deliver on her value proposition, not only today, but in 2 years or 3 years down the road? This looks at her competitive positioning and value proposition. The other dimension is internal versus external, is what do you do in terms of, the external here is your customer. The today here versus the tomorrow is how is she going to build her platform in terms of new skill set, new hires, new skill development in order to compete in the future. And ultimately here is how do you sustain financial performance and create value. All what you hear, your common denominator is that you have to create value. And one way of creating value is of course on the quality of the investment decision that you'll be making. So this concept is called the Balanced Scorecard. Now this Balanced Scorecard shows you here, so I'll show you, this is the theory, but I'll show you how it has been applied. Last week we had it, so Michel, who drives B-Synchro, I'll share with you what is the Balanced Scorecard that we have developed with the team. It puts you the 4 themes. One theme is on shareholders. This is what people are putting money. They have certain expectations. The other column is about customers. These are the other stakeholders that are important. You have to address a need of a customer. Here is about your core competencies, your operations. How well do you do in terms of operational excellence? And here is about your people, how engaged they are, how motivated they are. So this is about financial excellence. This is about customer excellence. This is about operational excellence. And this was about employee engagement or employee and this is not for large organization. This is across the board from startup to SMEs to organization. And what it does, it measures 2 or 3 things. These are only examples that we have gone through. So why I'm putting this is because this is the result of what we have done in terms of financial statements. In this case, we use net profit, or we could have used operating profit, EBITDA, before depreciation. Or we could have used from a customer perspective market share, or customer loyalty. In the case of Michel and Synchro, they said it's not customer loyalty, it's customer happiness, and they have a way to be able to track it. Then we look at the ways you manage internally, and a big portion is working capital, cash flow. Another portion could be on non-compliance risk. So these will be elements that you decide what makes sense for your organization. The final theme is about your people. Who are you hiring? Are you retaining your people? One of the big issues that a number of companies have is, Constantin, I train, I hire, I pay, and then they leave me. They leave me for higher salaries, they leave to the countries, so I end up being a school, it's like a business school. So this is a big issue in terms of retention and employee happiness. So all these are black or white. They are measures. So this is the Synchro. This is an internal, but this shows you a direct application of a company that has been funded by Beritech Fund 1, Beritech Fund 2 also in this case. So what we have done is we set and we put together the founder CEO. So he said, Constantin, here what matters for me is my operating profit. This is my number one most important on financial excellence, is how much operating profit I'm going to generate, and I'm following it by quarter. I need also to track my revenue, and I want to track my return on invested capital. This is my operating profit divided by debt plus equity. Now on the revenue, he said what's important for me, he's providing a platform to insurance company. He's the leader in terms of insurance service providing. So he said, I want to track it. Today, most of my business is in licensing. I would like to go into direct franchise and partnership. And for me, what's important is to have a balanced view in terms of the revenue that is coming from these different channels of distribution. Related to it, I want to check customer happiness index. They measure it as NPS and they track it. But I also want to measure the funnel. RACE is basically how much you have in terms of leads and how are these leads moving from qualified leads into closure, into project. And this he could track it quarterly. And the last, he wants to look at the number of active customers. So this is coming from the team. The entire team put together, they put their values. In terms of HR, number one is to make sure that there is the churn rate, which is basically how many managers to non-managers you have. This is what we call, and sometimes we look at it as the management versus the non-management, and the churn rate is how many people we lose. So this is important to manage, top talent retention and the employee happiness index. And lastly, in terms of efficiency, he wants to look at what splits between product-related revenue versus project-related revenue, and related to it, the project schedule variances, and also the shared share between recent acquisition and Synchro. This is an example of a balanced scorecard. It is tracked quarterly, it's reported quarterly, this is a subject of discussion with the board, but alone, it's only numbers. It gives you green if you're on track, orange if you're yellow where you're slightly off track, and red where you're completely off track. But what is more important than the numbers, because this is the outcome, is what are you doing today to get to these numbers? And this is what, for instance, we have decided. So we worked with the team, and he said, Constantin, the same 4 figures, these are 4 dimensions. What we need is we need to finalize our transformation plan. Rima is working on the same thing. She needs to put it together. It's one of her deliverables. The second thing is I want to integrate this acquisition that has been done. I want to implement financial budget and review, which did not exist as a process. So each one of them is a breakthrough project. Establish operation, France, Egypt, etc. Go into others. Each one is investments. This investment would require money, would require people, would require resources, and we have to a certain expectation in terms of dates, also in terms of ownership. This is a balanced scorecard. This balanced scorecard helps evaluate and you could be only yourself. What I need to do if I sit down with Rima is I want to know what is she going to focus for the next 3 months. help her make sure that this is clear, help her make sure that this is relevant to what she's trying to do, and if it's relevant, make sure that I review with her regularly to make that she is on track in order to be able to deliver this. This process of putting it together, defining these priorities, working with the team to implement the priorities is typically either an advisor or a coach that works with the CEO and the leadership team in putting it together. And this is one of the services that as Berrytech, IM Capital, and others we would like to provide to our companies that we are funding, and even the companies that we're not funding but we are hosting in our ecosystem. Okay, this is the concept of a balanced scorecard, which is basically your dashboard that includes the KPIs, and these KPIs are clear. If we want to know how Michel has done, we will know by the end of the year how he has done compared to what these measures are the most important one. We will know whether he's on track and whether he's off track, and if he's off track, why is he off track. We will also look at the different projects, and we as board or as advisors will try to see how we could help him and the team in implementing on these deliverables. Is this clear? So this is one application of financial ratio analysis, because these ratios are here. These ratios, you see them on return on invested capital, you see them in operating profit, you will see them into other matters that comes in. So this is one application that you could use and implement in the way you run your business and in the way you govern the company that you are doing. Any questions on this? Yes?
Would you agree that there's some overhead to measure that many things?
Yes, yes.
And my follow-up question is, at which point in the startup cycle do you want to put that overhead as opposed to working on it?
It's an excellent point. It's an excellent point. So in the case of Rima, said, Constantin, I'm all by myself, you know, but I say, Rima, it's fine. I don't need this. I need to have from you the 3 or 4 things that you're going to do over the next quarter. This is what I need. I need the 3 or 4 things. What are you going to work on? And I'll see whether these things make sense compared to what she wants to do. Because she has a certain idea what she wants to do in 2 years or 3 years down the road. So this is clear what she wants to do, how much she wants to grow, how many countries she wants to operate in. Then I will look at what she's going to do for the next 3 to 6 months and see whether there is an alignment between what she's trying to be as an organization in 3 years down the road and what she's focusing today for the next 6. And the role of the coach, of the advisors, is to make this link and to ensure that there is alignment. So now, whether it's not a full-time job, this is a check. It's your own checklist. She would have a checklist. We'll sit down, review it on a monthly basis. She'll tell me where she stands. Constantin, I have a problem here. I need to get to ABC. I can get to ABC. What can I do to get to this one? So these will be the sort of discussion that you will have. Now, in the case of Synchro, Michel is a visionary. This is one of the reasons I love to work with the team here, because Michel took it. He said, Constantin, this is important, and I'm going to have someone to come here and to be a PMO. PMO is a project management person, because this is critical. I have too many initiatives, I have too many projects. If I don't follow, I'm بروح من هون بعدين يمين بعدين شمال. I spend money and I don't know how much return I'm getting on this. So I'm at a stage now where this is becoming critical, and it's becoming my major bottleneck. Is I have a number of initiatives that I need to prioritize. This is one way of being able to prioritize. And in this case, he has a PMO that could be working half-time, could be working quarter of the time, that is here to be able to track it. So what you do is you could start it without anybody, by yourself, by listing these 3 or 4 initiatives, but having someone that you could discuss with. It's not only you and yourself, it's to have an environment of people that you could validate whether is she on the right track? Is she focusing on the right things? Is she's testing it in Tripoli before expanding it to Lebanon, and she would like to go? Are these the right initiative that he has to focus? And this is what we'll be discussing. This is a more, if you want, structured way. But in his case, when we're putting $3 or $5 million into a company, you better have structure. Because if I'm investing $5 million in your company, I don't think you have any problem in hiring somebody at $3,000 a month in order to be able to do the PMO office. Because then it becomes, and I need to have an insurance company. So this is, now it might not be this way, it might be more simple. I have not, but it's the way that you need. What will be, if I have to measure you as an owner, how I'm going to measure you. I'm your shareholder, I've invested in you. What will be the 3 or 4 criteria that will be important? Here it's maybe too big of a mouthful. Simplify it. Use out of it, instead of using 10 KPIs, use 3 KPIs. These are the most important for you. In the case of Frida, he said, I don't have KPIs, Constantin. ما في KPIs بعد سنتين لنشوف ال KPIs يجوا. هلا ما في no revenues, no billing, no nothing on this. No problem. What are your KSIs? What are you going to do over the next 6 months with your team, with your advisory that you're going to work on? And
KSI.
what is the KSI? So in this case, I said, don't forget about the KPIs on it. Show me your KSIs. And these KSIs, if these are the right KSIs, and this is what we discuss, then these KSIs should lead to KPIs in a year or 2 years down the road.
KSI.
Okay, I'm sorry. KSI is your key strategy. This is a key performance indicator. Key performance indicator is a specific measure. Revenue is a specific measure over a quarter. A KSI is something that a project that you initiate to generate. So for instance, if revenue is your KPI, opening an office in Egypt or in Saudi Arabia or in France is a strategic initiative that would help you generate your revenue. So basically it's what you have in place to help you get to your KPIs. So for instance, if your KSIs, your, where is the, it's like your action plan. To put it, it's like your action plan here. So I don't want to spend too much time on it, but this is one application of your financial ratios, is to be able to track elements that you believe are important. Hassan, and this is my cousin, so you have to be nice with her. Okay, you give her your seat. Yeah. So these were my two. So when I was in primary school, I used to copy from Raja in terms of Arabic. My Arabic was bad, you know. So, and Hassan was in secondary school. I was anyway, so no, this is a small... okay, so any questions on it? So this was a very good question. Any other questions? No other question? Okay, so this is one example. So in this case, you have on one sheet of paper, you will have one sheet. You're going to have how well he's doing now. You might not have 10. You might have 2 or 3 that you will have. These are, and then you will have your initiatives that are here. And then this is what we discuss. When we get together with the founder on a quarterly basis, we have on one sheet of paper how well he's doing in terms of his measure and how well he's doing in terms of the project, the enablers. These are the projects that will, if chosen correctly and implemented correctly, they would have an impact on your performance measures that you feel are important. And the way we've grouped them, this is one way of grouping them, is shareholder, customers, operation, i.e. internal, and employee, which are the main stakeholders in any organization. Okay? Now, we're now into investments. Now, why do I put it? Because remember the question I've asked you. I've asked you how much money you need was always the question that you will get. What are you going to use the money and how much return I'm going to, and I will help you through this next hour and a half to 2 hours, answer the question about how do we measure the quality of an investment. So we will start from ground zero. Some of you have gone through it. It's going to be a refresher. Some of you might feel I'm going too fast. It's okay. First time around, again, 25%, 30% of the learning is fine. Come back to it, and if you have questions, come and I will answer it. So what you have here, it's the concept of a nearby penny is worth a distant dollar. It's the concept of the time value of money. Is that $1 today is not worth $1 in 5 years or 10 years down the road. And this concept is going to be accompanying us throughout the discussion that we have. Okay, so when we talk about investments, how do we differentiate an investments versus non-investments? Say for instance, Hala is not here. Hala is an investment. Typically, we're talking about important amount of money. The size tend to be high size, large size. If you are here to buy a computer, I don't necessarily think it's going to be, unless it's a very big mainframe or very big servers that you need, but the size is important. Small size, you don't necessarily need to have an investment analysis. Large size, you will need. The other one is timing, where the benefits are not immediate. The benefits are going to be over a period of time. And the last one is there is a risk factor behind it. And this risk factor could be low, could be medium, or could be high. So these will be the 3 things that would make you decide whether it's an important investment or whether it's a traditional expense. Give me examples of expenses that you do on a regular basis as a startup. What would be a typical expense? I'm sorry? Salaries. Salaries is typical expenses. Marketing expenses that you have in terms of social media. What others? Renting. You have rents that you have. These are typical expenses. Give me now an example of what investments would be. So remember the B-Synchro case. In the B-Synchro case, what would be investments that they are making? I'm sorry, opening branches. Opening branches you have to hire. This is one, branches. What else is there? Geographical expansion. What others? Developing new products. Developing a product could take time. You know, you have to develop the platform, you have to develop the teams, you have to ensure that you have validation from customers. All these things is time and it's resources that you have to spend in it. So this is also investment. Other examples? What? I mean, trainings, I would question whether this is part of running your business. So training will be, unless it's a major training, unless you're deciding to go and invest a big amount of money to do a skill set development, but if it's ongoing regular training, this should be part of normal running expenses. Give me other example of investments. I'm sorry, new sales channels. If you want to open a new sales channel, the case of B-Synchro, they're looking at opening 3 other sales channels. This is a big investment. So we're looking at here, you have to understand what the channel is, you have to find the right distributor, you have to find the right, if you're franchising, all these are investments that you have to make. Other examples of investments. For instance, in the case of B-Synchro, they've made an acquisition. An acquisition of a company is an important investment. They've made an acquisition for a majority, they want to make the acquisition for the rest. This is another investment that you have to do. These investments have an impact in terms of timing, has an impact in terms of the amount of the money, and have an impact because each one of them have a higher risk or lower risk. And you as an owner, every time in your life, without even realizing it, you're making these decisions. You are trying to trade off, should I go there or not? I give you a very simple example. How many of you are in the process of buying an apartment? Nobody is buying an apartment? Okay, so yeah, no, but anyway, what you do is being it for an apartment or a car or whatever you want to do, these are decisions that you make. Should I buy or should I lease? You know, should I rent or should I? All these are decisions that you make in terms of investments, whether it makes sense to have this one versus this one. So you have some trade-offs. Where are you going to get the biggest buck in terms of, and you make these decisions based on the amount of money that you have. Now, when a company is in a situation where you don't have cash, there is very little investment, you really are running on a shoestring. But a number of companies that have gone through have today in a position where they have cash available, and it's important for them, when we're talking millions of dollars that are invested, that this amount of money is being used in the right way. Because the value that you're going to create or you're going to destroy is primarily going to be related to the quality of your investments decision. If it's poor investment decision, you are going to be, there is a high likelihood that these amount of value destruction will go. So we will measure the way we will measure. So this is one. Now, examples of investments: new products you've mentioned, new markets you've mentioned, replacement of existing assets in REMA's case, research and development is a big chunk. A lot of you are in technology and IT. Takeovers and merger, we also mentioned it, and there could be some others that you have. But these are examples of decisions that you, if you're not facing them today, you will be facing them very soon as you will get the money and as soon as you get funds available. Okay, so this is basically the categories. It could be either because you're trying to reduce cost, or because you're trying to expand your revenue, or you're coming up with new products, or you have some strategic initiative that you want to implement. This is a way to be able to rephrase it. Now, okay, now this is the way I'll go through it. This is complicated. This is more for established organization, but it gives you a sense, even when we work as, this is the one that we use in our company in Al Ghurair. Typically what you do, the operating company come up with an investment proposal. This is normally evaluated by the CEO. It goes normally to investment committee. The investment committee would validate it from the board. In this case, if I look for instance at IM Capital, tomorrow we have our IC committee. Then there is a request coming from the investment manager. The investment manager presents to the investment committee. The investment committee informs the board. The investment committee takes the decision. In the case of IM Capital, I think it's the board that takes the decision. In the case of Beritech, the IC committee takes the decision but informs the board. But this process is a process that is being used today for companies like Beritech, for companies like IM Capital, or for any companies that have a certain budgets to invest.